Welcome to the Accounting Desk, where precision meets clarity in public sector accounting. In this session, we're diving into the heart of IPSAS 17, the standard that governs property, plant, and equipment. Imagine the infrastructure that supports every public service you rely on: a school building, a municipal road, or even the very equipment that runs a city's hospital. Today, we explore the principles that ensure these critical assets are accurately recognized, measured, and maintained. Our journey begins with a simple question: what truly anchors public sector financial integrity? The answer lies in standards like IPSAS 17, which provide a clear framework for accountability and reliability. As we unravel this standard, you'll gain insights into how assets are defined, recognized, and expensed over their useful lives. With every detail explained clearly, our goal is to empower accounting professionals, students, and public sector employees with the knowledge needed to navigate the complexities of public sector accounting. Let us start by understanding the overarching objective of IPSAS 17. The standard is designed to set out the principles governing the recognition, measurement, depreciation, and eventual derecognition of property, plant, and equipment, commonly known as PPE. At its core, this standard ensures that every tangible asset used in service delivery or administrative functions is accounted for accurately and consistently. It lays the foundation for transparency, allowing the public to see where and how resources are allocated. The objective is simple but fundamental: to provide a reliable representation of an entity's PPE so that future economic benefits or service potential are captured in financial statements. With this in mind, let's break down the primary aspects of IPSAS 17. First, we have recognition. An asset is recognized as PPE when it is probable that future benefits or service capabilities will flow to the entity and when its cost can be measured reliably. This dual requirement ensures that only those assets that truly contribute to an entity's operational capacity are reflected on the balance sheet. Now, consider the world of tangible assets within the public sector. PPE encompasses a wide range of items, from government offices, schools, and hospitals to roads, bridges, machinery, and vehicles that serve the public. While these items are diverse in function and form, they share two essential characteristics. By understanding this, we see why IPSAS 17 is so crucial in maintaining long-term financial clarity. They are held for use in the production or supply of goods and services, and they are expected to provide their benefits over more than one reporting period. Before we progress further, let's pause to define these assets with some clear examples. Picture a municipal government that owns a fleet of vehicles used for public safety, or a local school district that manages several educational facilities. These assets are not held for short-term gain, but are the workhorses that deliver ongoing public services. Their long-term utility justifies the investment, and their proper management is critical for budgeting and forecasting. Once an asset is identified as PPE, determining how it should be measured is the next critical step. Initially, PPE is recognized at its cost, a comprehensive figure that includes not only the purchase price, but also any associated costs necessary to get the asset ready for use. Think about the hidden costs: installation, delivery, site preparation, and even any costs associated with dismantling or restoring the asset at the end of its useful life. In cases where assets are acquired through non-exchange transactions, fair value at the date of acquisition is used instead. This ensures that the asset is recorded at a value that truly reflects its operational worth. After recognition, the journey of these assets doesn't end. The next phase involves choosing an appropriate measurement model for the subsequent period. Here, IPSAS 17 offers two distinct models: the cost model and the revaluation model. Under the cost model, an asset is carried at its initial cost, reduced by accumulated depreciation and any impairment losses. Alternatively, the revaluation model permits assets to be carried at fair value, subtracting depreciation and impairment losses. However, adherence to the revaluation model demands regular reassessments of asset values to ensure that any changes in market conditions are reflected accurately. Importantly, if an entity opts for revaluation, all assets within the same class must be revalued to maintain consistency and comparability. Depreciation is another core aspect of IPSAS 17, and it marks the systematic allocation of the depreciable amount of PPE over its estimated useful life. Depreciation begins when an asset is available for use. This means once it is installed and ready to function, its costs start to be allocated over time. The method selected for depreciation must reflect the pattern in which the asset's economic benefits are consumed. Common approaches include the straight-line method, declining balance method, and the units of production method. For example, consider a school building valued at $1 million with a useful life of 50 years. Using the straight-line method, its annual depreciation expense would be $20,000. Exact depreciation practices might vary based on the nature of the asset and its expected usage, but the systematic allocation principle remains constant. As we move further, it is essential also to understand the scenarios that trigger the need for impairment testing or derecognition of assets. Impairment occurs when the carrying amount of an asset exceeds the recoverable amount. In simpler terms, if an asset is no longer expected to generate its intended benefits, its value is written down to reflect this loss. Entities must align with other relevant IPSAS standards, such as IPSAS 21 or IPSAS 26, when determining impairment. Derecognition, on the other hand, marks the point when an asset is removed from the entity's balance sheet. This typically happens when the asset is either disposed of or when the asset no longer provides any future economic benefit or service potential. At the moment of derecognition, any resulting gain or loss is recorded in the Statement of Financial Performance, ensuring that the financial statements remain a true and fair representation of the entity's financial position. The process of keeping financial statements transparent does not end with recognition and measurement. It extends to the disclosure of critical information related to PPE. IPSAS 17 mandates a comprehensive set of disclosures. Entities must clearly outline the measurement bases used for each class of assets, the methods and rates of depreciation applied, and reconcile any changes in carrying amounts. Additionally, disclosures should include stringent details such as any restrictions on the title of the assets or contractual commitments related to future acquisitions. The aim is simple: to provide users with all the information needed to understand the entity's investment in PPE, and by extension, its future operational capacity. As we approach the conclusion of our session, let's consolidate the key takeaways from our exploration of IPSAS 17. At its core, IPSAS 17 ensures that only those assets that yield future benefits or service potential are recognized as property, plant, and equipment. It demands that these assets are initially measured at cost or fair value, and then systematically allocated over their useful lives through methods that best reflect their consumption patterns. Additionally, by incorporating rigorous guidelines for impairment testing and eventual derecognition, the standard ensures that financial statements remain both transparent and reliable. Throughout today's discussion, we have seen that IPSAS 17 is not just a set of rules, it is a framework designed to uphold the very integrity of public financial management. Each step, from the detailed recognition criteria to the robust disclosure requirements, reinforces the importance of accountability and consistency in public sector accounting. Whether you are an experienced accountant, a public sector employee, or a student aspiring to master these standards, the principles of IPSAS 17 will serve as a critical pillar in your professional toolkit. Reflect on the everyday infrastructure around you: a city bus, the government building next door, or the local park that is maintained with diligence. Behind every one of these assets lies a story of careful planning, detailed measurement, and continuous depreciation. IPSAS 17 guides that story, ensuring each phase is documented with precision and clarity. In the realm of public sector accounting, where every figure represents real-world impact, precision is paramount. In summary, today we have journeyed through the integral components of IPSAS 17. We began with an understanding of the standard's purpose, gained insight into what constitutes property, plant, and equipment in the public sector, and then unraveled the methods of recognition and measurement. We examined systematic depreciation, considered the implications of asset impairment, and finally delved into the essential components of disclosure that ensure transparency and accountability. Each of these elements forms the backbone of IPSAS 17, a framework that is as much about financial accuracy as it is about the responsible stewardship of public resources. As we draw this session to a close, remember that the clarity and consistency brought by IPSAS 17 empower every public sector entity to report its financial activities with integrity. The standard not only supports regulatory compliance but also builds trust that is essential for managing public funds wisely. Every asset, every dollar, and every service is linked by the principles we have discussed today. Thank you for joining us on this detailed exploration of IPSAS 17. It is our hope that this session has deepened your understanding and bolstered your confidence in managing and analyzing property, plant, and equipment. We invite you to reflect on the power of accurate accounting, a language that, when spoken fluently, speaks volumes about governance and trust. Let today's discussion be a reminder of the discipline and diligence required to meet these high standards. If you found this exploration helpful, please show your support by liking this video and subscribing to our channel for more educational content. Until next time, continue to pursue excellence in your financial expertise, and remember that behind every solid public service is a foundation built on robust accounting standards. Join us again soon as we delve into new topics and further enrich your understanding of the world of public sector accounting.